Hey everyone, welcome back to Corporate Decoder, a place where we decipher the sometimes scary language of corporate filings. Today we are diving into a filing that hints at some turbulence for Kaival Brands Innovations Group. Let's see if they can turn things around or if they're heading for a bumpy ride. This is an 8K form, also known as a current report. Companies file these with the Securities and Exchange Commission, or SEC, to announce big news that could affect investors. Think of it like a corporate town crier, shouting out important updates. The main event happened on April 3, 2025. So what's the scoop? This isn't good news. Kaival Brands just received a warning from Nasdaq, the stock exchange where their shares are listed. Apparently their stock price has been struggling. To stay listed on Nasdaq, companies need to maintain a minimum share price of $1. Kaival Brands failed to do that. The price of their stock was below $1 for 30 days in a row. Don't panic yet, the stock is still listed. This is just a warning. Kaival Brands has some time to get their act together and get that share price back above $1. They have 180 days until September 30, 2025 to fix this. If at any point before then the stock closes above $1 for at least 10 trading days in a row, the problem is solved. If they don't manage to get the stock price up by September, they might get a second chance. They could get another 180 days, but they need to meet certain requirements. Basically, they need to show Nasdaq that they're a healthy company, aside from the low stock price, and that they have a plan to fix things. Maybe by doing something like a reverse stock split. If they strike out completely, Nasdaq could kick them off the exchange. This is called delisting. That would make it harder for investors to buy and sell the stock. The report was signed by Mark Thones, the Chief Executive Officer. By signing, he is confirming the information in the report is accurate. Now let's step back and look at what this all means. Kaival Brands makes vapor products and the industry is very competitive and faces some scrutiny. This isn't an inherently great sign for the company. The low stock price reflects investor concern. The challenge for Kaival Brands is getting the stock price back above $1. They need to convince investors that they can be profitable. This could involve focusing on their best-selling products, cutting costs, or finding new markets. The listing is a big deal. It makes it harder to raise money and attract investors. Companies might have a reverse stock split to get the price back up, but a reverse split can scare investors. Sometimes companies that can't fix their stock price eventually disappear completely. So what's the outlook? I would say the future is very unclear. On one hand, the company has a few months to fix this issue and show that their products are desired by consumers. But on the other, this might be the start of bigger issues to come for the company. Thanks for watching. If you found this breakdown helpful, please give us a thumbs up, leave a comment and subscribe to Corporate Decoder for more insights into the world of corporate filings.